Hello everyone, this is Barry with Profitable Forex Alerts, and I am one of the traders here, and today you will be joining me in watching an introduction and educational video to the Ichimoku Kinko. Alright, before watching this video, please make sure you fully read the previous notes I have wrote about the components of the Ichimoku and exactly how it is used to trade. In this video, I will briefly go over that and show you exactly how traders use it to capitalize on gains and profits. Now, what I have in my charts right now is basically the Ichimoku Kinko, but missing a few components. All I have here is the Ichimoku cloud, or the Kumo, as you will. Now, why I put this is so if this is your first time learning about the Ichimoku, you get to basically see how it works. Now, Ichimoku, the definition means one look or at one glance. Alright, now the main purpose of the Ichimoku is to give bullish and bearish sentiment, trend strength, support and resistance levels, and basically entry and exit signals. So with that being said, when you see the Ichimoku here, what you basically look for is to dictate market sentiment. In this case, if price is trading above the cloud, we are looking at a bullish sentiment, and with that being said, we are looking to go long the pair. If price is trading below the cloud, we are in a bearish sentiment, and we should be looking to short the pair. All right, so when you look at this in one glance, we could just go through it. You just take a look at the sentiment of euro-yen. So we see that price is trading above the cloud. So we look for opportunities where we go long, and this is on a daily time frame. So the way I trade the Ichimoku is I like to look at weekly and daily sentiment to dictate which direction I'm looking to go when I trade it. Alright, so if I take a look at the weekly and the daily, and I come to the conclusion that we are in a bull trend or a bullish sentiment, I will go towards the lower time frames to look for an entry to get in the trend, meaning 4 hour and the hourly. Usually I do not go below the hourly. I stay around the 4 hour and the 1 hour time frames just for that extra confirmation and to avoid any false breakouts. Alright, so in this case, as you could tell, we had an uptrend. Price broke above the cloud, and this was last year February, and basically around 140.80 price climbed all the way towards, this is 104, it climbed all the way towards 111. Alright, so that's a 700 pip gain. So and this is exactly why I like the Ichimoku, because once we dictate market sentiment, that's the hardest part, knowing where the market is going to go. So if you have a heads up in figuring out where the market is going, then you go to the next step, figuring out a support or resistance level to get in. So basically, this is just the Kumo cloud, no Tenkin, and no Kijin, and no Shiku, because I want people to get familiar with the individual components before putting it all together. Alright, so pretty much after that 700 pip gain, price came back within the cloud, and it fell right below the cloud. And now on a daily time frame, you notice that the sentiment is now bearish. So we had a price break. Now we'll zoom in a little bit, maybe not that much. So now we broke below the cloud at 104.26. Price declined all the way towards, basically before a strong pullback, to 95. So from 104 to 95 is a 900 pip move. 900 pips. It fell. Alright, so if you notice that this breakout and you automatically shift your mindset to look to get short euro yen, maybe on a 1 hour, 4 hour time frame, then you could have capitalized on half of these profits. Now, when you look to get in a trend, because we are not picking tops and bottoms, all right, this is a trend indicator. It means we're not looking to get in the trend at the beginning, and we are not looking to get out at the very end. All right, if you take a look at it, this trend started up here, and we got in it pretty much in the middle. All right, now where you get out is a different story. That's where we're going to include the Tenkin and the Kijun for basically entry and exit signals. But pretty much just wanted to show everybody market sentiment. And one way that people do trade is Kumo breaks. All right, they'll look for a Kumo break on the daily or 4 hour or weekly time frames and take that trade. Now with Kumo breaks, I suggest if you are looking to trade when price breaks up and down the cloud, really do your research with pairs, because not every pair works well with a Kumo break. All right, you might look at Euro Yen and be amazed that it really follows through after breaking below or above the cloud. You see the trend, and you see that it really goes towards that direction. If you take a look at another pair, for example, let's say Pound Kiwi. If you take a look at another pair, for example, Pound Kiwi, a lot of in and out. All right, doesn't really give you what you need, in my opinion. All right, it's very choppy basically. But with Euro Yen, I feel like there is more follow through. All right, and it respects also the bottom of the cloud and the top of the cloud. That's the flat Kumo bottom or flat Kumo top, which often acts as, now I'll zoom a little more. This often acts as a gravitational pull where price comes towards it and bounces back off and continue going towards the right direction. So basically, just wanted to show everybody sentiment. All right, so if price is trading above the cloud, you should be looking for longs. If price is trading below the cloud, you should be looking for shorts. Now let's go towards the Tenkin-sen. Now, the Tenkin-sen is one of the components of the Ichimoku. And basically it represents the short-term movement for price. All right, it indicates the market trend. All right, as you see, you wouldn't use the Tenkin-sen to trade by itself. All right, it's practically like using the 9 moving average. All right, now key note is that the Tenkin-sen should point towards the same direction as the trend. So the steeper the angle of the Tenkin, the stronger the trend. In this case, if you take a look, I can see two situations where price started to climb towards the upside. You can see how the Tenkin-sen really follow price action. It just follows price action, and you basically know where the market is just by looking at the angle of the Tenkin-sen. All right, we do not use it to trade. We just use it as an indicator. Really, when combined with the Kijun-sen, makes a deadly combination. Now let's take a look at the Kijun-sen. The Kijun-sen outlined in beige. The Kijun-sen outlined in beige, basically it represents the medium-term movement for price. All right. Now, I like the Kijun-sen a lot. I'm going to go to the daily time frame, and with the Kijun, it really acts as a confirmation, support, and resistance, and a trailing stop line. All right. It's one of those indicators that you could use to get in a trade, to get out, for support, and for resistance, just like I said. And let's see if we can find a few examples. All right. One example how people trade with the Kijun is they'll dictate market sentiment. All right, and I'm going to go back to the pair Euro Yen, since that was a pair I used for the cloud. And we can even go to a weekly. So let's see how we can effectively use the Kijun-sen. And don't forget, when you use indicators, all right, the higher the time frame, the most likely it is to work. People really try to when they trade, they like to use a 15, 30-minute, 1-minute chart. However, when you're trending, or when you're using a trending indicator, you want to look at the higher time frames, because a trend doesn't, when you're looking to get in a trend, we're looking for that trend to last, not for a day or 2 days, but perhaps a month or even longer. So if you can figure out when the market is trending and get in that trend off a daily or weekly, then you can maximize on your profits by staying in that trend for a month and capitalizing, let's say, on 300, 400 pip gains. All right, so let's take a look at euro yen. And we have the Kijun. Now, what I noticed off of the bat is how well price action respects the Kijun. All right, now let's say, in this case, the sentiment for euro yen is bearish. So let me take a look over here. Now, what I'm looking for, all right, maybe I take a half of a position when price comes back and retests the Kijun, because I'm using this as a resistance level. So yes, indeed, price came to 109.30, all right, and this would be an area where I would take a short, all right, and put my stop somewhere towards here. However, might not do that because the risk to reward is not in my favor. All right, so what I'm going to look for now is another area where I could possibly get short the euro yen. So we had a price break above it. So now what I'm looking for is a price break below it again to tell me that the trend is still valid. So when price broke right back below the Kijun, all right, and I prefer to trade it like that. If price breaks above, I don't really want to trade it when, especially on volatile pairs. If you see that price came towards the Kijun, yes, you could take that short. But like I said, the risk to reward has to be great, because price came all the way towards 111. It came back to close below it. However, from 109.40 to 111.40, that's 200 pips. I am not going to put a 200 pip stop on any pair. All right. So a better way to utilize the Kijun is look for a break above it. All right. Price broke above it, went in the cloud. However, it came right back below it. It came right back below basically the trend indicator. All right. We use the Kijun. Another word for it is the trend. It came right back below it. So if you got in at the opening price of 103.90, price went all the way down to 94.10. All right, 900 pips. Now price broke back above it. However, we did not get in the pair for longs because price is still below market sentiment. All right, now look at how the Kijun really followed the price. All right, using it as good support. It never touched until we got to the week of February 3rd, 2014. All right, and like I said, I would not be inclined to take the trade when it touched for support. What I prefer to see is a price break below it and a price break right back above it. Let's take a look at some daily examples. And I'm going to expand the time on the daily to 5 years. Let's see how we could use the Kijun to get in a trade. Now, right off the bat, if you take a look right here, price broke above, all right, came back but below, and at 103.60, we have a bearish cloud, so sentiment is already bearish, and price broke below the Kijun and the cloud. So it broke below both. You would have gotten a trade around that 130.30 level, and perhaps you want to use the Kijun as your trailing stop, which is what we talked about, your resistance and your trailing stop. So we got in the Kijun at 130.60, used it as our stop, and once price came back and retested it, and let's say closed above, would have got out at 123. From 130 to 123, 700 pips. Another example, price broke below the Kijun again. See the cloud, broke below the cloud and the Kijun at 122.80. Now, you look for a close and a break above to get out. If you're using the Kijun-sen as an entry and an exit, you wait for that close above. Now, depending on what kind of trader you are, 123, you got in at 123, you could have held it all the way towards 110. It's a lot of pips, and that's only in a matter of a few days. Alright, let's find like another example where the Kijun-sen really made sense. And look here, price broke below the Kijun, however we are above the daily Kumo, so our sentiment is bullish. So what we look for is a price break back above it, and we got that, a price break above the Kumo and the Kijun-sen. So if we would have took a long at this price right here at 114.80, we could have got out on a price break below, and it broke below and closed below at 119.52. So from 114 to 119. All right, another example here, price broke below the Kijun, would have got in. We see that the sentiment is bearish, price is below the cloud, a very thick Kumo, which thick Kumos represent a lot of support and resistance. So we would have got in at 112, at 114.44. All right, would have got out at 111, 300 pips. All right, great trades. Look, a price break above again. All right, we wouldn't go long because the overall sentiment is still bearish. So we look for another price break below the Kijun for an entry. Would have got in at 110.80 and got out around 106. So the Kijun, if it's in the direction of the trend, you can use it as an indicator to get in that trend. All right, whether on a daily or 4 hour. Me personally, you might think that, okay, I do not want to trade on a daily or the weekly time frame because the signals don't appear as often as a 4 hour or 1 hour time frame. But what I say to that is basically, if you're trading a few pairs, maybe 5 or 6 pairs, then it becomes worth it. Because no, you might not get the signals all at one time, but if you're in 4 pairs and they're all going against you, and they're all going in your direction, then you could just multiply 300, 400 pips times 4 or 5. All right, and that becomes worth it. All right, now you're aiming for that much, and your stop would probably just be if price closes in the opposite direction of the Kijun. So you're not risking as much, maybe 50, 60 pips at the most if you're trading on these time frames. All right, so if you are in this example, let's say I do elect to go short at 110.80, my stop will be a close right back above the Kijun on a daily time frame, and my reward obviously is great. Now imagine if Euro Yen, Pound Yen, Kiwi Yen, or Euro Yen, Pound Yen, and Dollar Yen, they all correlate and they all gave us the same signal. Maybe Euro Yen on a Monday, Pound Yen on a Wednesday, and we were able to capitalize that. Say 700 pips. 700 pips, it could be our only 2 or 3 trades for that month, and we got 700 pips. It's not about the amount of times a signal generates. It's really just about how do you capitalize and your risk to reward on gaining profits. Okay, so that's basically using the Kijun-sen to trade. Now let's combine the Tenkan-sen and the Kijun-sen. All right. Now this is a very popular method of trading, using the Tenkan and the Kijun, similar to using a shooting star or a def cross or a golden cross with the moving averages. Meaning if the 50 crosses above the 200, that's your golden cross, and if the 50 crosses below the 200, that's a def cross, and you should be looking for short opportunities. Similar situation here. If the Tenkan-sen crosses below the Kijun-sen, in this case right here, that's a bearish signal. Alright, and if it crosses above it, like right here, that's a bullish signal. Now, there are certain rules or certain things to know about trading the Tenkan-sen and the Kijun-sen. One, when you have a Tenkan-sen cross below the Kijun-sen, but the cross occurs above the cloud, that is a weak cross. Pretty much because you're having a bearish cross in a bullish sentiment or in a bullish zone. Okay? So, yes, this played out quite well. However, it is still a weak cross. A medium cross is when price trades with a medium cross is when the crossover occurs within the cloud. Alright, in this case, a medium cross will be right here. How the Tenkan cross below the Kijun within the cloud. That's a medium cross because the components did not cross above the cloud, rather within the cloud. And a strong cross is when price breaks, in this case we have it right here, the Tenkan-sen crosses below the Kijun-sen, below the cloud. So we have a bearish cross in a bearish territory. That's a strong indicator. Alright, and in this case it worked out well too. So now, why we want to pretty much stay away from a weak cross? Because the trend is not established yet. So yes, we were on the up cross, so price crossed above, established a new trend, crossed below above the cloud, so it is a weak cross. But because we don't have an established trend, it is hard to determine whether that trend is going to see some follow through. So what you could look for is basically a pullback and confirmation with another cross below the cloud. So yes, we had a cross, we did not get in. However, on the hourly time frame, it generated another cross, and this cross happened below the cloud, which allows us to feel more comfortable getting in a trade because the success rate with a strong cross is more powerful. This is only on a 1 hour time frame. Now, like I said, I really like to trade on a 4 hour time frame. So let's take a look at the 4 hour time frame and look if we can find any strong or weak crosses. Now, you might want to start off just learning how to figure it out with a strong cross before you look to take more risk by doing a weak cross. So in this case, on a 4 hour time frame, we see that market sentiment is bearish. So we pretty much just look for a bearish cross, and we got it right here. We have a bearish cross. Now, like I said, where would you want to put your stops? In a case like this, you want to put your stops above the Kijun. Don't forget, the Kijun is probably one of the most important components of the Ichimoku because it establishes so much. Alright, so in this case, your Kijun will be represented as your resistance, your confirmation, and your trailing stop. So when price breaks, so when we got that strong bearish cross, we're looking to go short. So whether that cross occurred at the open, and it looked like it occurred at 169.56, and basically, as price is going down, we had the Tenkan and the Kijun both pointed towards the downside, indicating that the trend, yes, indeed is bearish, and you use that as your stop. So if you got in at 168.20, alright, you would have got out when price broke above the Kijun at 166.43, so about a 200 pip gain. Alright, and that's pretty much, in my opinion, what you want to look for when you first begin trading the Ichimoku. Now, like I said, the weak crosses always work, not always, but they do work as well. So if you want to try to catch a trend in the beginning, alright, in a situation like this where you see a weak cross, but what you also see is a Kumo break. So it's not as if the cross occurred extremely or around an area very far away from the cloud. So we had basically two bullish signals. In a case like this, you might want to take that trade. All right, so yes, we had a bullish signal, and on top of the bullish signal, you had a very nice Kumo breakout. All right, and don't forget, the Kumo is very thin. A very small Kumo means very little support and resistance. So price action is able to break through it more easily than breaking through an area like this, because this is a very thick Kumo. So we would need a huge tilt in one direction in the market for price to break through it. In this case, very small cloud. Price broke above it with a nice impulsive candle, and we had a bullish cross. Okay, now let's see if we can find another one. Let's look at another pair, or better yet, let's see if we can find one on the daily time frame. Now, daily time frame for pound yen, bullish cross. Why I like this is, one, we have a flat Kijun. All right, now flat Kijun represents basically there is no trend in the market as of right now. All right, you inexperienced traders want to stay away from a flat Kijun, pretty much because you want an established trend before making a trade. However, in a situation like this, why I do like it, and I will show you, is we had the Tenkan break above the Kijun. Not only that, but we have a very thick Kumo, and pretty much you could put stops if price was to not break, but close within the cloud. Then you will look to get out of the trade. But price respected the cloud, this very thick cloud. This cloud measures from 156 to 153, so 300 pips within the cloud. A lot of support. Okay, so price has been respecting that Kijun. Now price is respecting the Kijun above the cloud, and a very thick cloud just tells me that, okay, the market is not ready to shift trends yet. So we can get in, use the Kijun as a good support level and the cloud as a secondary support, and see if price could take off. And what do you know? Price took off. All right, took off from basically 157. If you use the Kijun as your trailing stop, all right, close below from 157 to 168, 900 pips. All right, so definitely a huge fan of that. Now let's look at what might be happening soon. If price breaks below the cloud on a daily time frame and we get a bearish Tenkan Kijun crossover, I might look to take that trade. Why? Because we're having two signals of what might occur. All right, we have a signal of price breaking below the cloud, all right, which indicate that we're going to be in a bearish sentiment. And we have the Tenkan crossing below the Kijun, indicating that we have a trend that might start, which is on the verge of being established. So we have one, like I said, sentiment bearish. Two, a trend on the horizon, a bearish trend. So you might want to take a look at that and say, okay, I'm comfortable taking that trade even if it's a weak bearish crossover. And these things you will pick up as you get more familiar with trading the Ichimoku. All right, now that's pretty much the components of the Ichimoku. We have the Tenkan-sen, the Kijun-sen, and the actual cloud. I do not look at the Shiku to trade because I pretty much use the cloud as that sentiment. Let's take a look at Aussie dollar. And in my next video, I will go into more detail on how to use other indicators on how to trade the Ichimoku Kinko Hayo. For example, indicators such as trend lines, simple but yet powerful. If you take a look at this, when you take a look at certain situations, you might want to hesitate before taking a trade. So yes, price broke above this, or if you're looking to get long or short, you could use trend lines as clear support and resistance levels. So in a case like this, yes, price broke above the cloud, but it's clear that we had a descending trend line from a yearly high. Okay, so you want to wait for extra confirmation, and that's what my video is going to be about. My next one is how to use different indicators in conjunction with the Ichimoku Kinko Hayo to get a higher success rate in your trading. Alright, but for right now, I just want everybody to get familiar with, one, identifying the trend or the sentiment. Look at where price action is relative to the cloud. Above it, bullish, look to go long. Below it, bearish, look to go short. You should work from the top on your way down. Look at the weekly and daily to determine whether it's bullish or bearish, and then look for the 4-hour, 1-hour time frames in order to get in that trade. And pretty much too, look at the Kijun. Look for pairs in which price respects the Kijun. Alright, look for pairs in where and time frames. In my opinion, Euro Yen is a great pair in which the Kijun is in which price action respects the Kijun. On the weekly and a daily, price respects us a lot. Look for different ways to come up with a good trading plan. Like I said, if price breaks below the Kijun, below the cloud, that gives me more reason to try to get short. It's breaking below 2 bearish support levels, in my opinion. Alright, so that's another good way to figure out or to create your own trading style and trading plan. Alright, and last but not least, look for crossovers. And again, not all crossovers are, the crossovers don't work well with every pair. So the Tenkan Kijun crossover would not work with, or it might not work as well with the pound Kiwi as it does with the Aussie dollar. Alright, so you want to just get yourself familiar with what pairs work well with the Ichimoku. Okay, and my next video that I will create is actually going to be using the Ichimoku with pivot points and trend lines, and how to come up with an effective trading plan to have a good success rate. Alright, I'm going to conclude this educational video right now, and hopefully everyone looks forward to my next video. Thank you for watching.